Hi everyone, welcome back to Be Rich. Today is the first day of the new era of Trump 2.0, and we saw the swearing-in ceremony. Those of you who were sitting and watching it early morning, and you saw what was happening there and his urgency to immediately sign executive orders on the stage itself, on the podium with grand spectacle. He was signing, and some of you have some questions about the new Trump 2.0, what's going to happen. I thought it'll be fun to have Anand with me on this as we discuss the possibilities of what Trump could be to India and the world and the American market as it goes. So, what is your first take on this, Anand?
Trump is already doing a U-turn. There are no tariffs as of this. And then he said we will have a study. Now he's saying 1st February there will be a tariff on Canada and Mexico.
There could be, he's saying.
There could be. And basically he is negotiating for a deal. So he does not know what he wants. And therefore the markets like certainty, and there is no certainty what he would do. So, and he is saying China will be the first country he visits. So we do not know where it will go, what will happen, and how bad it is going to be. I think these 4 years we are set for a roller coaster drive. As far as India is concerned, the news is not good. Basically, what has happened is, if you could take all the FDI that has come out and all the money that has gone out and how much Indians have invested, there is no net investment into India. 1.3 million students are studying outside, and that is continuing to grow. More Indians are trying to leave the country, and this is going to be extremely difficult because how the H1B visa is going to affect the Indian IT industry is something which we do not know. And the gap between the bond yields in America and India is almost only 2% now, which means that there will be a lot more weakness in the rupee, or the RBI sells more dollars. In the non-derivable futures market, it is expected that India has about $60 billion short. So when the market happens, it has to settle the dollars in loss. So the RBI is still defending the rupee, and it is better for them to allow the rupee to depreciate in one flow rather than burn dollars like this. We are overvalued by 7 to 8%, and so we can expect a bigger fall in the rupee. Any fall in the rupee will mean that foreign portfolio investors will not make money, so they will be forced to sell. Last 2 days, the market went up, today, the market is down. So the market will keep bouncing at these rates till there's a big negative trade and the market is pushed down further. So end of the year, if they don't not cut rates, we will hit 90, and if they cut rates, we will go to 92, 93. So this is what it looks like for India as far as India is concerned. And even for US, two things will happen. He is going to allow unrestricted drilling for oil, which means that oil prices are capped at a point. And Russia and Iran will face the brunt of this sanctions for oil. So I don't see a blowout in energy prices, and I think everything else will take its own normal course. But it will be good fun to watch, and I would also like to see how the American institutions fold. They have been built over 300 years, because he has now said that they will leave the WHO.
Yes.
We have left the Paris Climate Accord. So what is going to happen in America is of great interest to us. How much the Congress and the Senate resist him is something we have to wait and watch.
Correct. But already there's been more further tightening on Russia and Russian oil, which we've been consuming. What do you think that's going to, because the rupee is becoming weaker, we'll have to now look at our oil portfolio differently, or whatever mix we are buying with this Russian pressure now.
Yeah, but
Won't this lead to further inflationary pressure?
Inflationary pressure in India will not abate, because as long as the RBI doesn't cut rates, there is some hope. If RBI under pressure cuts rates and the rupee falls, you are going to have bigger inflation. I don't think 2-3 things will not solve in India. Inflation is not going to get solved. Unless private investment picks up, there is going to be no jobs. And even IT companies are not renewing. And if you look at this quarter's results, all the successful IT companies, great success and growth in profits have come because you have cut back on salaries, you have cut back on employee costs, which is the main thing. So I don't see any development. There is a budget 10 days from now.
Correct.
There'll be some tinkering with tax rates. But already people up to 7 lakhs are not paying any tax. So if you up to 15 lakhs is where there is a 30% starts at 15 lakhs. Maybe you'll make it 20 lakhs. But I don't see any change in the way the government functions, because for the government to function, it has to cut indirect taxes. Then only money will be in the hands of the people. If you are not cutting indirect taxes, you are going to have trouble. And the government's own capital expenditure, which it will spend on capitalize, creating new roads and all that infrastructure, has fallen short of the budget estimate. So, and disinvestment target as usual is missed. So overall, there is going to be pressure. That means government will spend less to keep the fiscal deficit down. This will put heavy pressure on the overall economy. So rising costs, no jobs, and the falling rupee is going to put heavy pressure on the middle class in the coming years.
Okay. So that means if we are looking at it like this, sectors such as what we usually consider capital expenditure sectors, which have always been promoted saying India will spend more, government will spend more. You feel there will be a restriction because the government will have no choice.
But you look at what L&T has done. L&T has gone nowhere in the last 1 year and only 40% in the last 2 years.
And they're focusing more outside India.
They are focusing more outside India. And you see the foreign tourists who are coming to India is also reduced.
Yes.
So we need a reset in the economy, and the reset can come only if private investors start to invest. And for private investment to take place, you need demand. For you need demand, you need people to spend money, and people need to have money to spend it. So we are caught in a chicken first, egg first situation.
So, but just by cutting indirect taxes, do you think this will solve the issue then? Because you're saying
Yes,
we have so many facets in this problem.
No. But indirect tax cutting is the first step, which means there will be money in the hands of the people. People like me, money in the bank I won't spend. But somebody who is poor in the middle class will take that money and spend that money. So if you cut my petrol price by 15 rupees, which the government can do, 15, 20 rupees, what will an auto man do? What will a truck driver do? He's not going to save that 50, 60 rupees. He's going to have a couple of meals more. That means the economy will get kick-started again.
But that is the same argument which is being presented to RBI about our interest rates, saying by lowering interest burden on us, the people who have less EMI to pay, they'll take that same money.
No. How many who buys EMI, boss? Just because RBI cuts rates, banks won't cut rates. There's a liquidity deficit. That is, there is a liquidity problem. And that is because whatever deposits that was there with the government banks have been taken and put in RBI. There's a liquidity deficit. Government is not spending money. So the situation is very tight. Even if you cut interest rates, it's not going to mean lower EMIs. So you get people to spend and then get private investment going. So the only way is if you have to shift the burden, shift it to the richer guys and put lesser burden on the middle class and the lower middle class.
But in that way, if you look at it, if the liquidity is the issue, banks should be giving more liquidity. That is what has led to this problem which we're having in microfinance, right?
No. Microfinance is a separate sector. Overall, there is no liquidity. Money is tight in the money market today. Extremely tight. This is because government is the biggest holder of cash. The banking money was kept in the commercial banks. That has moved to RBI to keep its interest costs low. So if you take all the money from the banking system, banks have no money to lend now. Your problem with micro sector is if there is liquidity in the banking system and the RBI reduces rate, he will lend more to the microfinance sector. But for that, the government has to act.
Okay. And this current environment which we are facing in India, then macroeconomically with Trump coming with the policies, he's saying the dollar is strengthening further in the coming days. Where do you see something like gold going? Or, even our...
See, even if gold does not rally in US, gold will definitely rally in terms of rupees because the rupee will correct. If the rupee corrects, say, 6 or 7% this year, then the gold will also go up by 6 or 7%.
Because gold is pegged to dollar.
Gold is pegged to dollar.
Okay. So there we have some clarity given to you guys about what is going to happen with Trump. Like Anand said, we really do not know what Trump does. Because he says one thing, then by the end of the day, he does another thing altogether. So who has his ear and what he wants to do, nobody really has any clarity. All we know is the next 1,400 days are going to be very interesting. as investors, as people living on this planet, and what happens in the US definitely affects all of us. So I'd strongly suggest you keep an eye on it, but don't worry. Like Anand says, still our list is there. There's still a lot of value in it. And we're long-term investors. By the time we are done 10, 15 years, Trump will be a long gone history by then. And we won't even be talking about all these policies at that point of time. So look at these lists which we have. Keep buying value in Tiffin coffee ranges and keep averaging your cost, and you will be fine and dandy, as my dad used to say.
Okay. As we speak, the Sensex has suddenly dropped. The Sensex is 800 points down, which means that the Nifty is about 250 points down.
Correct.
So whatever was gained in the last 3 days has disappeared.
Correct.
Thank you for watching Be Rich. If you like the content, please do subscribe to our channel, turn on the bell notification, and please do subscribe to our channel. Send this video to your friends and relatives and have them take a look. Thank you for supporting Be Rich.
Thank you.
Hey guys, that my uncles VinodSrinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.